want to come to each one of you and first of all ask you, since we have an array of audience here, let me start with you first, Vivek, and tell us on what is your sense on how important is it to have a full-on portfolio, and how important is to have commodities as a part of your portfolio?
What I've realized over the last 10 years of my career is knowing commodities as a trader is extremely important. And I don't know how many people are here who are actively trading the market. Commodities is actually the best instrument to trade the market. For people who are trading equity derivatives and not looking at commodities, you are missing a very important asset class, because the law of economics actually works best in commodity, currency, and then I would say equity. Because technically in commodities, there is no one party who can dominate the price movement. Whereas in equity, there could be a potential someone who is trying to let the price move in the favorable direction. So one thing is for sure that as a trader, one should look at commodities, especially the way crude oil moves, the way gold has moved. It's a brilliant opportunity to make money as a trader in commodities market. And now that options is there, and equity options, we all know that the way they have grown, similar kind of an opportunity we see will happen, especially the regulation which has changed recently, that will happen, and all of you should get into commodities futures trading for sure.
So, usually, Vivek, when we talk about diversifying your portfolio, while we do talk about gold, we also talk about commodities separately, because gold in itself is an asset class, and then, of course, is commodities. And that is exactly what I want to come to you, Rakesh, on. Vivek, and while we've spoken about on how commodity is an important part of your portfolio, how does one start including it in? I'm assuming there are some people who haven't tried their hand at it. If there was somebody who wanted to start now, what would your advice be?
From an investor perspective, obviously you already have an account with your broker. So all you need to do is allocate some capital, your mindset into tracking commodities. Start doing your basic level analytics of commodities. Take one commodity at a time. And I think gold is very closest to everyone's heart. So take gold, start tracking gold. There are enough tools available these days that you can track these prices or draw the charts and look at the long-term charts. And 10 years ago, we have to really pay hefty price to get access to chart. These days, TradingView, Investing, all are literally free platforms which can give you those kind of charts. And start deploying some money, track it, and then eventually you will get confidence and you can deploy more money. So that's how you can start, because that's easier because you already have a broking account with some broker. And in case you don't want to be in the derivative side, you still are very scared of it, then mutual fund ETF is the best way to start, SIP, and in 6 months you will get that kind of a confidence on tracking the commodities.
Vivek, this one is to you. As we move ahead from here, with the kind of participation that we've seen, of course, the budget is around the corner and the expectations are really high and the volumes have been increasing, so has the participation. As we were talking in the beginning of this panel as well, that SEBI has been opening up commodity markets. What is your sense? We have been working hard for the last 15 years now in commodity markets to reach where we need to be. What more needs to be done within this sector?
To answer your question, we need more broad-based participation. What is happening, we are one of the we are making market for options. We are very active in options trading. So options generally has this wall curve theory, where you are giving quote on both sides of the market across the value chain, all the strike price. Now you can stand there, you can wait for other people to come, and you can build your position, and you can keep on waiting for other people to come so that you get chance to exit. Now for a technology firm, it is fine, because ultimately you are switching on your computer and let the computer do the work for you. But when there is a person behind that technology, that person would need a regular flow from counterparty. So who is going to be the counterparty in future? The FIIs, the mutual fund guys, because they are the guys who can build bigger position in market. The retail investor can be seeker of a price. They cannot be contributor of a price. So that's where I think a lot of work which we all are doing for the last 15 years, try to convince the regulator that we need more broader participation from institution, because they are the one who can hold more OI, and automatically when there is more OI in the system, the volume and the depth of the market will go up.